Good morning, my name is Carl Williamson and I'm speaking to you from our London offices. It's December 2022. I'm the manager of the Nexus Global Solutions Portfolio and the Nexus Global Dynamic Portfolio. The Nexus Solutions Portfolio is up 3.5%, while the Nexus Dynamic Portfolio is up 2.4%. That takes the respective returns this quarter so far to 5.6% and 6.3%. Global equity markets enjoyed a second strong month in a row, with emerging markets outperforming their developed market peers. Bonds also performed well, with yields falling both in the US and in Europe. At the beginning of November, the Federal Reserve and the Bank of England both lifted interest rates by 0.75% to 4% and 3% respectively. Investor sentiment improved significantly after the release of the US CPI data during the month. This came in at 7.7%, which was below expectations, and provided some comfort to markets that we might have reached an inflection point in inflation. The idea that the rate cycle might be coming towards an end provided a boost to both equities and bonds during the month. Emerging markets did well because we saw COVID restrictions starting to be reduced in China and an increased focus on vaccination. While the announcement of a complete end to zero COVID in China may be some way off, this provided a boost to Asian and emerging markets during the month. In November, an expectation that the Fed might be coming towards the end of its hiking cycle meant that the dollar suffered its worst month since 2020, and it fell against all the major currencies. As well as emerging markets, other China-exposed stocks did well. In the UK, this included the miners, Anglo American and Rio Tinto. Other stocks that did well included Process and TSMC. TSMC was up 28% during the month, and received an additional boost after news that Warren Buffett's Berkshire Hathaway had secured a $4.1 billion stake. In both portfolios, we made new investments in Nike and Disney. Having added to gilt positions during the turmoil we saw in Q3, we were also able to secure profits in these during the month. Markets have been able to recover some of their losses in Q4 that they saw in the first 9 months of the year. Our view is that inflation will continue to moderate as the economy weakens, supply chains ease and the labour market weakens. We continue to think any recession will be fairly mild, and as such we remain cautiously optimistic for 2023. All that remains is for me to wish you all a very Merry Christmas, and I look forward to speaking to you in the new year.